I'm going to try and get through 28 slides in 5 minutes, so I'm going to be really running fast here. If you want a copy of the slides, you can shoot me an email. I've been at SVB for 10 years. We work with early stage, development stage, commercial stage companies on really innovative debt solutions, so if you're interested, let me know. Quickly looking at first slide, dollars invested into venture across all sectors. You can see biotech, which is the orange line, staying fairly stable over the last few years. Device, the red line, is declining a little bit. And if you go into that over the first couple quarters this year, you've really seen a decrease in deals and dollars. And if you double that first half number of 1.1 billion, end up 2.2, which would say device would be down about 22% this year. We'll see. We're really monitoring that. Top line, 10.5 is dollars invested into healthcare companies on a yearly basis. The $7.5 billion number is venture healthcare fundraising. You can see another 3-year increase in numbers. 2016, we think that 10.5 number is going to be 9 to 9.5 billion. The funding number is going to come down, and I think that's just a function of a lot of venture firms over the last 3 years have been able to successfully raise their capital and are actively deploying it now. Series A is pretty good news. Biopharma set for a record year, close to 100 deals plus. Device, a really nice comeback from 2015, which was a real struggle. You can see not a ton of ophthalmology Series A deals being done. Looking at who are the most active investors in biopharma, you can see OrbiMed sort of leading the way. It's a nice sort of focus between traditional venture and corporate venture. And if you look at the top 60 investors in biopharma and where they're putting their dollars to work, mostly in oncology. Ophthalmology, in terms of new investments over the last couple of years, not so much. On the device side, a much more stratified group of investors. You have crossovers, you have a private equity player, you have Asia money, you have some angel groups, you have a couple corporates, all deploying money into the device sector. Looking at the deals done over the last couple of years, non-invasive monitoring's garnered a lot of activity, but you also see a good amount of activity in ophthalmology as well. So the crossovers have fairly vacated the private investing space over the last few quarters, but a few of them are still actively investing, and those are the folks who we've seen most active over the last few quarters. Going into distributions back to investors, really the last 3 years we've seen a boom of investor getting distributions back to them that they've been able to send out to their LPs. This year, a little bit off from what we've seen. It's not going to be another up and to the right year, but I think it's going to be close to 2013. And you can look at the M&A, which is the light blue number, already similar to what we saw in 2014 and 15. And if you looked at biopharma exits, IPOs, and venture-backed private M&A, M&A is down a little bit this year, and we sort of predicted IPOs would be off as well, but I'm a little surprised that M&A is not as active as it was last year. But the M&A you do see is decidedly early stage. Preclinical and phase 1 companies are really where the majority of the activity is for private venture-backed companies. But IPOs are really early stage too. Over 50% of the IPOs that we've seen in 2015 have been preclinical or phase 1. And in terms of IPOs, pre-money valuations have stayed fairly stable, but the amount that the folks are raising in your IPO has gone down fairly dramatically. On the M&A side, all-in deal size has gone up, and that approaching a record $600 million as a median value, but the upfronts have suffered a little bit so far this year, although I think that number is going to come back up before the end of the year. And if you specifically looked at ophthalmology, 3 M&A deals since 2011, kind of phase 2, phase 3, 4.1 years in terms of time to exit from the close of Series A, fairly quick. And if you look at dollars in, the upfront multiple has not been that great in ophthalmology, but if you do hit your milestones, you have a chance to really make some good returns. On the device side, not much on the IPO side, but very active and continues to be very stable on the M&A side. Most of that M&A being on the later stage, already FDA-approved commercial side. Last year, you saw a bunch of mitral valve, cardiovascular-focused early-stage activity, but really, it's a late-stage focus for M&A. Ophthalmology actually has a good amount of activity there since 2012. And if you looked at since 2011, 7 deals, 2 of them development stage, the time to exit fairly lengthy at 8.2 years. But if you look at the dollars invested in, on the high side, but the median upfront and total deal size are actually on the bigger side. So if you sort of put together, and sorry the slide is not perfect here, but if you look at M&A, IPO in both device and biopharma, ophthalmology is actually the number 4 indication that we've seen out there. And finally, some of these takeaways you've already sort of seen, but I think fundraising's good, dollars invested pretty stable, and M&A continues to be pretty good. So thanks very much.